All right, cool.
You think you think AI could take over the trading space
I
and
mean,
like
it's
eliminate what we do?
trying. It's trying. I mean, there's already like AI space that does it, right? Like bigger banks and institutions are already using it. But as far as like for us, it's still a long time away. It'd be
Oh my, I'm
nice.
scared, man.
It'd be nice.
No, I don't want to like because I feel like if AI takes it over, it's gonna somehow be less profitable.
I'm sure.
Either
I'm
I don't
sure there
know.
are algorithms that are involved to take the trades, but it's not. It's not there yet. I mean, I know. I know it's probably doing it now, but it's not there. At least I
I
think
want
so.
to
I'm
know
not
if
sure.
if I actually get good at this, if I'll be able to do this, next year, the year after,
I think so.
or will there be like different rules, regulations because of the involvement of AI?
I think so. All right. Let's go back to. What is that? No. Okay. Let's say 9 o'clock. Right. Um. See my screen? Okay. Oh, I'm not sharing it. Share it.
Say it one more time.
I'm gonna share my screen.
Oh, okay, yeah. Did you start recording already?
Yeah. Yeah. Start recording.
Oh, okay.
All right. So you can see my screen.
Yeah, I can see it.
All right. So let's take a higher time frame analysis step back on this. Right. So
Hmm.
we understand that the legitimate range of everything is, here, right? Top of liquidity here, and bottom of liquidity here, right? And I'll make this blue. So we understand that. There's the ultimate pressure on top and the bottom, right? So in the daily, the highest, you know, it's ever been is right here, which is in November, right? And the quarter wise, the lowest it's been is within this area right here. Okay. And remember, like when we look at like dailies, we're thinking of like, hey, where are the equal highs, equal lows that we want to see, right? So it already reached this area, right? It swept, took a little run, came back down for the past week. It's been going down, right? Right. So understandable. And yesterday we had like a really interesting, run through of the low here, right? So the low, we took a run at it, right? This is the fourth, which is this morning. So overnight, it broke that low. Okay, perfect. So if we're looking at the 9 o'clock, and let's look at I'm sorry, the 4 hour basis in the 9 o'clock. Okay, we already understand that on this particular range, and if we're looking at like what I was looking at this morning, just based on range, right, and I'm going to make this transparent so that we don't have to really worry about it, right? Transparency wise, this is the equilibrium, right? You know, so this morning you can see that I kind of made that line through this equilibrium here, right? So where that the shorts are and the longs are, this is what I'm looking at. Okay, from this range to this range, right? That's what I'm looking at. This little area right here, right before
All right, but
before 9:30.
why those lines?
Again, like this. This is what I'm looking at right here. This whole entire area right here. You see that?
Yeah.
Okay. So that's just me understanding. Hey, their price had what? It was just like uh, the A part of our accumulation, right? Manipulation,
Mhm.
distribution, right? accumulation,
Right.
it comes back down, and this is just the equilibrium, right? So, in our sense, these are the range. This is the whole range. This is the median, right? If it goes above there, I'm safe to take a trade going from A to B. Like if we're doing it A to B, anywhere from here to here, right? I'm safe doing it, and anywhere from going down here to here, right? I'm safe, right? But when you're looking at it, um, when you're looking at it, you understand that this is the high, this is the premium, this is the discount, right? You just see
Mm-hmm.
that. So
Right.
for the majority of it, right, after last week, the past couple days, it's been seeking what? The discount, right? And then premium and these two bars from yesterday, it was seeking discount, and it wants to stay at discount. So if it passed here, right, I would assume, hey, it doesn't want to be in this discount anymore. But in in our model, this is our breaker. This whole entire area becomes our breaker. See that?
Mm-hmm.
Right? Range. If we're on the 4 hour, this is our fair value gap. Come back, and it should hit this 4 hour fair value gap. Right? And reply to it. So it does it during London. Right? And that's just on a bigger scale. Like, oh, okay, well, I am short biasing, but it's before 9:30, so I don't really want to do anything yet until something happens, right? We go into the 1 hour,
Mm-hmm.
okay, and you can see like this area is just the median, and there's the reply, right? There's it stops here. Here's like so this is that area, all right? It comes up and finally passes it, and every time it passes this area, there's some really violent movement to pass this area, so this is an area, right? Anytime like you see a violent movement down or up in a certain area, there's a big violent movement coming into it, violent movement coming back out. It took its time, but violent movement getting out of it, violent movement coming up, violent movement coming back down to it. You see it? There's just big
Mm-hmm.
bars just coming in and out of this area. So in the morning when I see that, like I'm understanding this is my zone, my breaker block zone in the heart in the bigger area in the higher time frame. I'm going, okay, well, let me take a look at it. My interest is here. I'm assuming that it's gonna short. That's just my assumption before the morning opens, right? So I want to know. Here's my here's my structure A, B, right? C, and that's only on the hour. We go lower, 15, right? We want to know how many times market breaks. How many times does market break? One here, two here. Does it keep on going to break this structure? We want to see. So my point of view is, I want to see it grab this liquidity and do something. Can I take a trade on the first bar? Absolutely. I can take the trade on the first bar and expect it to hit this and TP. But I can wait, right? Let's get a better trade. So if we're looking at it, that's 9:15, 9:30. No, it's at 9:30. Hold on. This is 9 o'clock, 9:15, 9:30, right? So if I wanted to take that first bar, I could. I had a lot of time, 15 minutes actually. If we went into the 5 minute, I had a lot of time to actually grab all of this, right? But I wanted to see, hey, what if this is the liquidity grab I want? If this is the little mark right here that I want, right? And understanding that this area is what I want to see get like moved into. It will ultimately move in with or without me. What does that mean? It means that price will tell me on this bar. So in 15.5, it came back up, and I see this bar come back down. Right, I already had that short bias. Reason why I showed you breaker block theory here, and it's passing market structure 1. It killed that. It killed this, and it's making that formation step ladder. Right, so it's doing the continuation pattern that I want it to do. 1, 2, 3, 4, 5, 6, 7, 8, 9. And it's going back up. I want to see it go down. This is my target, my first target. So let's take a look, right? So I'll enter because I see this, but I'll enter on the next candle, which I think I did. Right? And it came up and stayed back down. I entered again. I think I added one more for 2. There it is.
So it was in the red, and you added another one?
Mm-hmm. Because
you were that confident in it.
Well, inside bar, and then as soon as this one started going down, I entered again. And I was already, like, I think my trade was literally right. For my comment, my median for the 2 contracts was in this bid. And it was here, right? And again, I moved my stop loss to this. So again, I would do this. Let me do the short trade here. Right? My short was here. My stop loss is literally right there. And my take profit, I think I had it like here, a little bit more than what's normal. Right? Now, if I saw this bar, and I already had the short bias because of MSS right here, market structure, I guarantee you there's an SMT here. Right? If we look and look at the 3. Oh, that's not the right time. What's the right time? Here. Here, right? So here, and SMT on the YM side, right? Oops. I'm already like, okay, there's my profit. I'm out, right? 200 points, which, yeah, that's pretty much what I had. $4,000, right? 200 points. And solely on the basis of the reason where, like, okay, I waited for it to come back into this area and short, right? So if we look at it really closely, 930 liquidity run comes back up. Does not go above this. 1 bar. Nope. 2 bar. Nope. 3 bar. Nope. 3 bars, literally like 15 minutes of not being able to come above this, I'm shorting. I'm already waiting for that bar to move. So this bar started moving, I entered. Right? Even at 1. I entered on the blue bar, but honestly, 1 bar right here is fine. I should have done it here. Right? Why? Because if you look on the daily, that was where the last daily MSS is, right? The next daily MSS is right here, which is it's shattered. It just went straight through it. Okay, let me go back. 15-minute, right? Like, oh, I'm okay, right? If I get out, but again, it's still going. I think Sean got out really early, like here. And then killed his account. But this is my trade, right? I wanted it. I could have done more, but again, I didn't have that kind of time to like sit there and watch it. Well, let's see how it plays out.
200 points is more than enough.
Yep. Right, and here, if it went below here, if it went below this area, which it does, I'm entering again. I should enter again. I would normally enter again.
After a pullback, and then going below that area again.
See, but the scary part about it is this right here is like $800 on one contract that pull back up. right? But to
Yeah.
be safe, maybe just like wait for the line to come back below the body of this bar and enter. Sometimes you should wait for, like, honestly, when the bar, like like let's say this blue bar is what scares you. You wait for for the price to pass the body,
Yeah.
right? For here, you wait for price to pass the body. Sometimes you're really scared. You want price to pass this body. Sure, wait for price to pass this body. You still have a lot, a lot. I mean, and when I say a lot of room. Like a lot of people would just 80 points, 100 points. That's over 1,000 on one contract. But what initially ends up happening? Over 350 points down, right? Before it even starts to think to tinker off. But if I would have kept this, for me, that would have been a, let's see, how many points would have that been?
Probably like
522
600.
points. Yeah, almost 600 points, right? That's what, $2,000 every 100. That's 12 grand for one contract. And in this case, it was
Wow.
two contracts. That'd have been like 24,000. But the idea is, it's not, oh wow, I did a thing, but my analysis of it was from the higher time frame. My analysis of it was, hey, it's already on that downward spiral. I need to figure out where that median is. If I couldn't see it on a daily, I did see it on the 4 hour. That's that median. Did it touch it? Yes. My perfect, if I was perfect and awake, I would have been already entered over here. Right? Because
What
that
time is that?
that is like 2 in the morning, right? At London.
Oh, you would have entered on that?
Absolutely. If I
Wow.
was awake, right? One contract is all I need, right? Because I understand this, the reason why the move is so strong for the day is that it takes out all of this. It takes out all of this, right? And it's searched for the last liquidity pool right here, and that's why it stayed above there. So for majority of the day, I guarantee you, I don't remember because I wasn't watching, it probably stays above this line, right? So if we look at it again, I will play it till now, I guess, right? It stays above that line. Right? This is that liquidity point. Now what do we look at?
Hmm.
We look at that same structure. There's two MSS here, and here's that next structure of line, that next zone that's strong, that we want to see that reply on. Right? We always look at these points of interest as replies to what we see. Right? We want to see it come back up here to continue downward. Right? If it replies here, you know, we want to go, oh well, it starts doing one of these. But we'll see. We know when these movements will happen, but we don't know. Like, we get kind of like too much analysis on it, right? For me, like I put too much analysis, and I'm too, when I have accounts, I want to get in as soon as I can. Right? Today was the exact opposite. I waited until it told me, hey, it's time to go. Let's do it. Like, your mark is here. 9:30. Right? Comes down, tries to get liquidity, comes back up. Right? Like, normally, if and it passes this area, like if it has liquidity, that sweep happens and it passes this area, I'm long. I wait for that reply, right? But it hits liquidity and doesn't pass this area, and I see all these wicks from here to here. All these wicks coming down, I'm in. I'm in. 1, 2, 3, 4. I'm in on this bar. And I'll just put one contract stop loss right here. And if you're wrong, right, that's your risk. Your risk is once it comes down and you're wrong, if it passes this area, you're going to be wrong. Don't try to like move your stop loss away from it, right?
Right.
Leave it
Yeah.
there. You're wrong. Let it take it, right? And be okay with it. But if you're right, that stop loss. Imagine I have my stop loss. It would have never taken it, not even to the end of the day. I could have been in the positive until the end of the day, right? Or until now, and the day was here. I didn't even know. Wow, it came back down. But I had so much time after that trade to take profit till almost 1 o'clock in the afternoon, and then it rebounded. Right? Why? It hit that apex of the short of the of the daily over there, and then it replies. And to me, when it does that, I could go in for longs here as soon as it breaks up, right? Take up all of that, wait for it, comes up again. This is my area, take it. Wait for it again, take it the same area, right? That's in a longer basis, in a daily, in a 4 hour. It's just this line, right? So when we're looking at it, that's the range. You take shorts if it you know if it comes here, and you take shorts or anywhere near here, right? And longs anywhere near here, right? In the median, just how we do it on the daily when we're doing like the previous day equilibrium high. There's also like the dailies. We have like if you take a look at that premium equilibrium and discount, that high equilibrium and low of the day, you can take trades off of that. But again, my understanding today was when I was talking to you before was if I understand where price is going in the middle of the day, this is that the range for the past few days. Here's that equilibrium, right? And you can see like if I reach out through the other days, that's still the equilibrium, right? There's that gap, right? Violent move down, rejection, rejection, violent move down, right? You see how price reacts to just this zone, then you should be able to like see it. And as soon as you see it, okay, like you see no button like around here, right? If we zoom in a little bit, barely any of the bodies stay here at that time. Only wicks, right? Violent movement, violent movement down. Like price does not like this area. There's so many buyers and sellers here. So let price go. Okay, we want to sell. Go with that momentum, but have the stop loss where you can see liquidity. Liquidity is here. You get in anywhere near here, but stop loss has to be here. You'll win out. We're here now. Has a horrible time staying here. Price has a horrible time staying here on the higher time frames. So you wait for the reply. You wait for the next area where it should be like, okay, I don't like it here or here. These are the two areas that we want to see get hit next. If it's able to get above this, take the trade to here, from here to here. If it gets below this, take the trade from here and here to here. That's your TP. Right? It's just take a wider stance or a couple steps back and look at the higher time frames. It's just, you know what I mean? Like it's easier, right, for you and for me. So when I look at it, I can go, okay, I can see where price is rejecting, and again, these are your other zone. You want to see some type of violent move away from it, right? This is the zone, right? Order block, breaker, right? You want this breaker to have some sort of violence. There's a fair value gap here, right? Probably on the 5. Was there? Maybe? I don't know.
I think it was just chop, honestly.
Yeah,
Where is he?
but like look at it. Like you have the breaker here, this all breaker, fair value gap,
Oh, okay.
right? Breaker, fair value gap. Now you want to see the reply, so you can wait for all of this to happen. Come back up into the fair value gap and take it, and that's massive. All that is massive, right?
That's hard.
That's hard. It's
Yeah, that's
I
not.
don't
That's
say it's not. And that's why like the reason why people were like Trader Kane, all those people are like successful is that they can cover this liquidity, right? So if you're
yeah.
only okay with covering 1 micro in this liquidity, that's still fine. Or 2 micros in this liquidity where you can lose 500 to 800 bucks here, that's still fine because in the long run you still made 1,000 coming down, right? So as you get your account up more, right, then you'll be able to be like, okay, I can take one mini, right, and not worry about whether or not like it's going to take me out because I feel that a lot of people in our channel have just fear of entering, right? If you're a trend line trader, it's good, right? It's good. It literally comes back at the trend line, comes back down. There's your retraces, right? Then it breaks. Here's your long as a trend line trader, right? Like, you know, just you have to enter. I don't know how you did today. Did you enter at all?
Yeah, I shorted at the wrong time. First off, I was in on the first bar. I was up maybe like
This bar?
45 points.
This
'Cause
bar?
yep.
Okay.
Mm-hmm. Yeah, I got in like right about there.
And it.
And then I had take profit at previous day low, obviously, and
Uh
then
huh.
it came up against me.
Uh huh.
I got out break even, and then I
Okay.
tried to short one more time,
Okay.
on that bar, like so the next bar, the one
This
you're
bar? The
at, the
blue bar?
next one.
Oh, this one.
No, no, lower, the right there. Yep, I tried to short there,
And then it went
and
up
then when
and
it came up,
you
I
took it out.
got out, and then I just left it alone.
So I think yeah. So you remember what I said, right? Like you want it to reply, right? So like, fine. If you're if you understand that okay, there's that liquidity sweep, right? I literally said like if you look at the chat at a certain time, it said we want liquidity sweep or run, right? It does it. There's a
Hmm.
sweep to it. We want to see the reply. I'm not busy looking here. I'm not looking for it to pass. A lot of people are looking for it to pass. I'm looking for it to come up and tell me to get in, right? Like this is my retracement. Okay, all those wicks retrace. It comes below that blue bar. I'm entering. I'm entering here. That's where I want it to be. And it's shorts. Okay, I missed this. Fine, it'll come back. Does it? Absolutely. Here, short. Even if you miss it, short. And but then, at that point, you need to let it do its job. Even if it comes back to
Right.
you here, you
Yeah.
need to let
Yeah,
it do
because
its
when it
job.
comes against you, that's why I said it's scary because it's not just a clean movement.
It won't.
You
It'll
can't
never
protect
be.
yourself
It'll never be. I think at
because
one
if
point,
you protect yourself, you're a big profit. Yeah.
yeah. I mean, I think at one point I was like down 100, 200, maybe 300 bucks. I went add.
Today?
Yeah, in that first trade, I was like add, because then it started going down. Add. So I had 2 contracts, and then it just went right. Like it's just no. Like you have. I would never do 2 contracts on a live account or on a funded account, but just knowing like you have your stop loss here, right? I will literally let it get to stop loss and be like, all right, I'm 0 for 1 and not trade. That's what I need to be like, right? But my my model is okay. It hits where I need it to be as continue, and I need to let it play out to continue where it has to go, right? And if I go to the longer route, right? Like I said, my entry is up here. I cannot be afraid for it to come back here because I need to have it stop loss. And you saw, I think, after like after 100 points, my stop loss was at 50 points, right? So if I
Something
look,
like that. It was
Yeah.
The
So
stop loss is at 4.
if I look at the trade channel, right, and Sarah's like, I can't trade, right? My, okay. I go. Right. So you see one trade on top. It continues
Yeah.
two trades, right? So two contracts. My stop loss
Oh, I
is where
see.
above
Mm-hmm.
liquidity, right? Once it goes for me, or goes with where I want, right? That's already 100 points. Where's my stop loss? It's pretty close. Oh, I mean that's actually at the end. That's
Yeah.
almost 200 points. That's 200 points. But at one point, I think, uh, where was it? Yeah, it took me out here. It came back up, but I have to let it play. You know, if I didn't put it here and left it, let's say at 25.71, right? At 25.71,
Mm-hmm.
25. Wait, where was it? 25.271, right? 25 271. 271 is up here. How much more would I have been in the green? Another 200 points? Right? If I didn't mess with it and I just left it up here, you know,
Honestly, I think the best thing was to take profit and then look for re-entry on a retrace.
no, I
Just
agree.
confirm it.
No, I agree. I agree. But again, I made those. I literally did two trades for the day and I was done. Right. The thing is, sometimes, like, and I think you have to kind of congratulate yourself for not over trading today, because that's something that you could have done here when you messed up. Right. You longed here.
Mm,
You longed here. You could have been like, I need to make that money back, and over traded and lost it, but you didn't. So you kind of have to take that as a win. But next time, how many contracts were you taking out on micros or minis?
it was a mini. It was 2 minis.
Two minis. Again, you're gonna need
Well,
to.
1 mini per trade, that is, not like 2 minis at a
Right, right,
time.
right. So you need to understand where that liquidity is, and you need to be like, okay, I entered here or here. I think you entered here, right? But or around here.
Yeah,
You entered around here,
yeah, somewhere around there.
and your
Hmm.
stop loss should have been up here. I think. Let's take a look at it. If I did a short, and you did it at that line here, how many points would that have been? 155 point stop loss.
Oof.
What is that? 155 points is um, 3 grand stop loss. It's 3 grand
Wow.
stop loss,
Yeah. Oh, that's three
right?
grand. Yeah.
But in the long term, let's say you let it go to like here, right? 384 points, right? So 384 points times 20 is a $7,500 win, right? So it's a 2 on 1. It's a 2-1, basically 2 RR, right? Um, so yeah, you have to kind of base that out. So if that risk is too high for you, then guess what? Do half position, right? So instead
Yeah.
of a 3 grand, a $1,500, or a quarter position, two or three micros, which is a $600 stop loss or a $500 stop loss, right? You, you
Yeah.
you have to understand where that risk is. I'm okay, like literally on every account, being okay to risk like 3 to 4 grand, but that's not right either, right? Like I should be only risking $500 to $600. So 2 micros, 3 micros should be where I should go. Um, And on a funded account,
So
that's probably where I would be. 3 to 4, well, 2 to 3 micros or 4 micros.
So, question about stop loss placement, right? So I completely understand the liquidity is where the green shaded area is at the top.
Mm-hmm.
I get it, but you don't think it would have been suffice just to like put the stop loss at this swing high, um,
Or
after price retrace before continuing down?
here,
Yeah,
I mean,
is that is
yeah,
that
because
not enough?
it'll no, yeah, it is 69
Because you see
points.
that now, how much?
Yeah,
69?
69 points. Yeah,
All right, that's a lot more stomachable,
but
like.
again, you can
uh,
move it. You can move it up, right? So once you're in the profit, let's say you're 100 points up, move it there, right? Or move it.
Yeah, okay, yeah.
You know what I mean? Like you can trail it, but like let it play out, right? Like I mean I let it play out, but again, I'm not stupid enough to go. I'm gonna keep on. I'm gonna leave it up there. No, I want money. If it goes against me, I want money still. So 4K is enough, right? On 2 contracts, right? But again,
Yeah.
if if it's all that you can stomach, you can. It's easier. It's harder to add. It makes it work. I mean, it's harder to create contracts in the beginning and take away, right? And be like, oh shit, I lost too much because I over contracted. Or you can go, I did 2 micros and it went up, and now it's for me by 10 points or 20 points. Let me add 2 more micros. Then all of a sudden you'll have like, you know what I mean? But like, again, it's a style. It's a thing that I've done. You're gonna have to get used to it. It's the same thing. It's your style kind of benefits from doing this and creating opportunities for yourself. Like that's how I've always traded. Like if it's gonna go for me, I'll add more. But if it's like against me, and I'm over traded or over contracted, I'm gonna lose, right? Like my recent losses are like habits of, I'm not wrong. It's I'm over contracted, right? If I stayed with one
Mm.
contract, I would be fine for almost the whole entire day. But I don't because I'm greedy and FOMO happens. So for me, it's let's not do that anymore and just trade one contract and just let it play out. Because even when it went against me for 100, 200, 300, 400, whatever it is, um, it eventually went where I needed to go to. And you're gonna hear yourself that it went exactly where I thought it would go, but you got lost in the chop,
Yeah,
right? I get lost in the chop. You get
exactly.
lost in the chop. But if we under contracted, if we undersized a little bit in our position and added, we would never lose. Like if you did 5 micros, you would never lose on a 250 account. You never lose, right? Like you can take losses better than the wins, right? Like for some
I
strange
think the
reason,
biggest,
I'm sorry.
I was just saying, I think the biggest thing about taking the losses is knowing, I guess, in a way, stop trading P&L and trade the charts,
Absolutely.
but also having that understanding of like what should be expected. Because another thing you're really good at, you can get out of trades before it even hits your stop loss because you're like, nah, this wasn't it.
Yeah.
Like, being able to spot that,
Yeah.
like that's another thing that, because it's easy to leave the stop loss up there and say, all right, I'm not going to touch it.
Hmm.
And tomorrow, price just aggressively reverses, and it was like a 70 point, 100 point stop loss,
Yeah.
because I had the same faith because I
Yeah.
didn't bring, I guess, current understanding of the market to the situation.
Right.
I was using like this general rule. But I think that's where we all need to be better is like certain conditions require a certain reaction time.
Right.
And this is one of those conditions where you just don't leave it and walk away.
Right. I mean,
Because
and that's the thing, right? A lot of people, I think that's what when you're looking at like say Instagram or gurus on YouTube, they're like, oh, I left my stop loss all the way up here and it did it. And I'm like, that's not what a usual person would do, right? A usual person would be like, okay, let me trail it. I'll trail it as far as I could without hitting it and be okay with or you should be okay with it. But a lot of people will trail it, make $200 on an $800 move, and then be angry at themselves for only making 200. That's wrong. Yeah, that's the wrong mindset. You should be happy you made money at all, because
Yeah, for me, I'm just happy I just caught some of the move. I don't
right.
need
But
the
a lot
whole
of people
thing.
aren't. A lot of people aren't, and a lot of people are like, I need to make everything or get in on the exact price time. And that's hard for even like the gurus. That's hard for like ICT. That's hard for Trader Kane, right? They none of them. I've seen not one person get in on the exact right place, right? I mean, I'm lucky sometimes, but like even for me, it went against me a little bit today. Could it have gone more? Absolutely, because price can do whatever it wants. We can't like predict it. We have to just base it on the model, and if the model continues to go where it goes, you need to get in the train. You need to hop on that like 100 mile per hour train, right? Because that's all you really can do. You're just going with trend based on your analysis, right? Your analysis is, oh shit, it's moving, it's picking up speed. I got to get on, and that's all it is. Um, and it's scary because like sometimes predictability is hindsight, right? Like it's just, oh
Oh, it's always 20.
yeah.
Hindsight is always 20.
So for me and you, our goal isn't because to be right perfectly. It's not. It's just to be consistent with what we have and our risk, right? A risk management. Again, like I said, and you've heard me talk about it through forever, right? If you can't take that liquidity risk, then size down. That's all it is. Because like when I have funded accounts, I'm not taking that type of risk. I want to keep these accounts, whether it makes me $50 a day to $100 a day. I'm gonna make that really call to make sure that I have these accounts for at least a year. Right? If I have 20 accounts, these accounts are gonna be for a year. I'm gonna make $100 a day, $200 a day. I don't care. If I make a positive account trade that day is done. Right? Because overall, the risk will still be there when I take the payouts. The risk will still be there when I have a bad day. I should be able to recover from my YOLO days. I should be able to recover when I go down that rabbit hole and fuck up an account. Right? That's
Or you know what I
that's it.
think would be a great strategy
What's that?
for all of us to adopt is like you said, that entire move was like almost 600 points. I've been playing recently with like scaling out, and like let's say after the first 200 points you scaled out,
Mm-hmm.
maybe like instead of a mini you sold like 7 contracts, and then you just like left your stop loss, or maybe move it to break even,
Mm-hmm.
and then you got 3 contracts and you just let it go, let the
Yeah.
three
No.
go,
Yeah.
and you would have made a shit ton more money doing it that way as well.
Yep.
You know, that's a decent way to stay in the move, and giving yourself the opportunity to just let it run
Mm-hmm.
and actually being profitable if it goes where you thought it'd go. Like if
Absolutely.
you had that liquidity, that daily liquidity targeted,
Mm-hmm.
that's like, what is
That's
that,
money.
like 400 points, but
Yeah. Mm-hmm.
three contracts, and then you got 200 points on the minis. It's like that's a perfect, that's good for the week.
That's good for the week.
You don't need to trade it for the week
But
if
you
you do
understand where I'm
something like
coming
that.
from. Like as long as you understand the tops and the bottoms where liquidity is, and then the middle. Look for where it's going to
Right.
reply to you.
Mhm.
Like right here. And this is the past 30 minutes that we're talking, right? Where's that reply? It doesn't want to go above that zone. And it broke MSS here again. Right? It broke this. Right? So overnight we want to see it break this one, come back
Right.
into this to go down even further. That's all we want. That's all we want. We want to make sure that take that 300-foot view and use it for your benefit. 4 hour. If you can't see on the 4 hour, right, you understand that here's what we're looking at.
Okay, so that box, I actually wanted to ask you about
This
that.
one.
So I understand the bigger that one, yeah, because the bigger one on top is the equilibrium of the daily range,
Mm-hmm.
basically.
Mm-hmm.
And then we had that accumulation zone in that equilibrium.
Mm-hmm.
What is the significance of the second
So
box,
where
though?
where does price reject from? Okay, first rejects here, right? Am I right? You see it, right? It rejects,
Uh-huh.
goes back up, right?
In general, like it comes to that
Yeah,
area and then
yeah.
okay, yeah.
You see it come back here,
Uh-huh.
right? What
And then
happens?
it
It
rejected
rejects
again.
again. So these
Uh-huh.
huge rejections on the 4 hour is powerful. Anytime it rejects on a 4 hour, look how powerful that is. That's a lot. That's a lot of hours of rejection. Am I wrong? A lot of hours here
Yeah,
of rejection. So this zone, a lot of hours of rejection. Fast-paced movement through a zone. Boom, boom. That's something I want to see. I'm like, this is a zone that I should look out for, right? Why? Because of this. In this case, oh, it stops. It was powerful enough for it to reverse itself, right? Momentum wise, it does it again. Powerful enough for it to reverse itself until that morning. It couldn't pass this zone again. Right? It couldn't pass the zone. So I'm eyeing this. So what happens? Something powerful, big movement on the 4 hour, let it pass the zone. Doesn't mean it doesn't exist. It's still here, but it needed something really powerful. A lot of like short leverage, short positions to push it out of that zone, which it did to get that daily liquidity run. But it doesn't mean that it's still it has enough momentum or power on the long side to pass the zone as well. So it doesn't,
right.
right? But you have to train your eye to see where are these zones, right? Training the zone, where are these zones of predicament of interest that we have, and it's at that area, right? That area
So let me
is
ask
where
you
interest.
another
Yep.
question about
Mm-hmm.
that area.
Yeah.
Now, is it more powerful because one candle came into it and the next candle immediately left away versus the
It's
swing
not
high that
immediate.
was put in right after it?
No, no, no. It's not immediate, right?
No, I mean, but price didn't hang out in the area, is what I mean. Like
Well,
it
yeah,
said, all right,
yeah.
from that area, I'm leaving because like the swing high it put in, price sort of like
Here, you mean?
danced
Where?
around in
Here
that area.
or here?
Yeah, exactly.
Where? Here or here?
No, no, the first one.
Here.
First one. Well, both really. Price sort of like it's comfortable, it's trading there, it's moving there, and then it moves away. So I
Okay.
was asking if the abruptness of the move away is what makes it significant.
Abruptness of the move away. I think you have to explain that further, because
All right.
I don't. I
So
don't think. I don't think what you
when
mean is here. Let me show you. So okay, we're
no,
we're
no,
look.
that
We'll,
I view that
okay. Let's
to
take it
me
back a little
that's
bit.
abrupt.
Okay, fine. It's okay because
Uh-huh.
again, all of this, right, is a lot of selling pressure. Am I correct? Just think of it as
Mm-hmm.
how much selling happened here. A lot, right?
Right.
The new
Uh-huh.
week happens. There's a gap. There's a volume imbalance here,
Mm-hmm.
right? Huge selling pressure until where? Here, where it stops. And you're like, oh, it stopped and it reversed. Just the reversal of this, you need to look at the zone.
Okay. All
Just
right.
because it reversed, that's all.
That
And just because this
yeah,
reversed, you need to
okay.
know this zone. Okay.
Right. Okay.
But we
Gotcha.
know that here's that accumulation area that needs power to move around, that needs either a volume imbalance or a fair value gap to get out of this zone. So, again, we need to mark that, right? We need to understand that this is a volume zone. Once it moves away from it, right? We have to understand this still exists. It played out this morning where you go, okay, it couldn't take this pressure here, this uh, point of interest, and it moves out. But before that, you know, in the afternoon session of yesterday, where did it kind of reverse again? Same exact area. So we know equal lows here shows you a point of interest area, right? These are equal lows. So when it came up here, this is an area of pressure, a point of interest that it could not get out of or get through. It needs a huge blue bar or needs fair value gap volume balance to get above this, right? To get above all of this, but it couldn't. So once it could not, it did the exact opposite. It had a lot of more pressure, a lot of more selling pressure to get through this area, which it does violently, strategically, right? to get where? To the next POI, which is here. Right? The next structure shift, which is here. But again, it needs a lot of power to get past this area, which it did not have. Right? Meaning there was too many buyers here in this area. But it
Right.
does not have enough power to get through here. So now this is that interesting range we're going to look at if it can get out of.
We would
If
look
the
for that to become like a resistance, right?
Yeah,
To
exactly.
potential
So if it
more.
so in the shorter areas, the hour 50, it cannot. You see it comes back, nope. Tries again, nope. So our interest is we need to see where this goes. Does it pass this area or pass this area? These are 2 points of interest. This area or this area, right? And if it
Right.
does one or the other during Asia or London or tomorrow morning, then we need to reply with our own analysis and say, hey, this is something we have to look at, right? You understand?
Mm.
It's a little hard, but
Yeah,
I
no,
think
it makes perfect sense.
if you look
It
back
makes
at it,
perfect sense.
right? If you look back at the
Hmm.
higher time frames, you will never
Hmm.
you would kind of not get confused on it on the lower ones, right? Like I only saw
Yeah, I
this.
see how you use it to
I only
stay
see this.
oriented throughout the day.
Right. I only see
Yeah.
this. So my purpose is it's going to short. I'm going to make sure that this is my line in the sand. This is where I
Hmm.
know that like my safe point is, right? It'll never, to my assumption, it'll never go past this area, right? And it shorts. I could have been short here with my stop loss here, and still be good, right? And again, I tell you, it's okay to be very late than it is to be early. Early actually fucks you up more than to be very late, right? So like, I'm not scared of taking a trade at 10 o'clock, right? I think my first trade was at 10 o'clock. Right?
Actually, 10 o'clock isn't even late. Late
Yeah,
is like
11. Yeah,
12:31.
but like,
Like
I want to
that's
get it in
late
that
trade.
zone. I want to get it in this zone, right? But like, I sometimes I'll do the 9:30, right? If I see two black bars or two short bars or two long bars, like for example here at 9:30, I see this bar, I'm in. Keeps on going down, I'm in somewhere here. See what I'm saying?
Yeah.
Right? If I see two blue bars and it passes a point of interest that I have, I'm in. I'm in around here. Just for this. I don't have to be scared about this. Again, 9:30. Shorts comes back up. This body breaks MSS. I'm in. I don't have to be scared. That's 3 days in a row. Wednesday, 9:30. Does nothing. Nothing. I shouldn't trade.
Yeah, that's a bad day.
Right? So we need to keep that in perspective of where we are in the long run. In the long run, on a 4 hour chart, high here, low here, you know, we want to know where we're going. This is the last pressure. This is literally the last part that we're looking in right now. If it passes, it's not going to have much resistance going all the way down here.
Mm.
The USD right now, and you have to look at the other contributing factors. The US dollar is weakening. Bonds are getting sold by other nations, right? And inflation is getting up there. US, the US itself is in turmoil, and a lot of things aren't going its way because we have the current, GOP.
Hmm.
But you also have to be like, you can't be biased on that, but also look at figuratively, like, from last year when it was all the way down here, and he manipulated it for gains. The U.S., like, so think about it this way: this is where it dropped from here, and the gains are all the way up to here, right?
Mm-hmm.
If he didn't do what he did, okay, we shouldn't be where we are. Where should we be?
Higher.
That should have been where we are. But in the long run, what happens? It's literally coming back to where we were last year. Right? If this is where we were last year, and I move it across,
Mm-hmm.
we're not too far off from where we were last year. The beginning of last year. Not at all. You know, for you, and you're learning this, you have to keep track of where we were, where we're going to be, and if we can predict the end of the year, you know, without him messing up again, or kind of guaranteeing that he'll mess up again, where should we be
Mm-hmm.
by the end of the year? Like in March and April, I honestly think we're probably going to be below this blue bar. It may short even more. It may actually do exactly what it did last year and come all the way back down to where it was. So if we're looking on the daily,
Oh my.
right? If we're looking on the daily, it took him April, May, June, July, August, September, October, November, December, 9 months to get from here to here, and it'll probably take 9 months, and it'll go straight down here again.
That's the time to buy an option.
That's the time to buy an option. But who can afford an option to go for a full year, right? What I would do is look for stocks at this area. I'll just set an
Look
alert
to buy, you mean?
to buy. Yeah, to buy
Yeah.
stocks like
Mm-hmm.
on the cheap, ABBV. You know what I mean, right? Dividend stocks.
Yeah.
This is where you should
Yeah.
buy. This is where you should buy. Right? Like the people that the federal government retirees I contribute to, like
Mm-hmm.
we did amazing, right? But it's so easy
Oh, I
just to look
remember
at.
you told me you reduced their exposure
Uh,
during that big drop.
yep,
And then I reached out to my 401k person. I told him to do the same thing
nice.
because it was insane.
Yes.
And then once it returned to normal, I had him fix everything back to normal size.
So right now we're all on in international funds right now. So like all our stuff is all international right now. And we're actually 7% up already this month. And
Oh, nice.
yeah, so they're like, holy shit, KJ. Like you should look into becoming a federal employee, man. After all this stuff, it's such a, it's really interesting because there's always a place for somebody, and
I
it's,
think they have. I did a rotation at the VA in
mm-hmm,
um in New York, and yeah, that wouldn't be a bad idea, honestly.
yeah. But you could do it in Maryland. You could
Great
do it in
benefit.
great
Um,
benefits, retirement, you know. So, but anyways,
Yeah, that'd be. You know
uh,
what? You just gave me an idea.
dude,
I didn't think about that, but
great benefits,
yeah, I
retirement.
might
You're
look.
still in your 20s still, so shit.
No, I'm 30 now.
Oh, you're 30-year-old man.
Yeah, so I
Oh,
got to figure it out.
yeah, man. I got married at 34, so uh,
Oh wow.
yeah. So I mean, like, I'm 40. Shit, I'm gonna be 48 in March. So I'm
Mm.
getting old. My my eyesight in the past year has I'm wearing glasses now since last year. Like everything's
Oh
blurry.
really?
Yeah, I started last year because
Oh wow.
I went to a seminar, kind of not a seminar, but like a uh, what do they call it? A convention kind of thing for cloud computing, and they had the projector on to see the board, the projection boards. Like we were in an auditorium, and I couldn't see the projection board. It was blurry as fuck. And I went, holy shit, I can't see that. And I went to the eye doctor the next day, and I was like, your eyes have gone horribly wrong. So I'm probably gonna look to
Oh
get,
wow.
yeah, I'm probably gonna look to get LASIK probably this year or next year because I can't. I hate glasses. Um,
Yeah, maybe. I don't blame you. I'll
Anyways,
do the same
I'm
thing,
recording
honestly.
this so people will hear this later. uh,
Yeah,
but anyways,
yeah.
but
But
yeah.
all right.
So
One
understand
more
this.
question.
Go ahead. Go for the question.
So the equilibrium you marked, I understand it's the equilibrium of like the most recent price leg
Mm-hmm.
on a high time frame, right?
Mm-hmm.
But the two lines specifically you put around it, you're basically just saying that pay attention to this general zone and not just the equilibrium line,
Right.
correct?
Right. Mm-hmm.
Because like it's so my question is it doesn't matter where those lines are
Doesn't.
exactly, like they
Doesn't.
could be up a little bit, down a little
It could
bit,
be
so
up
long as they're
here, up here. It
around.
doesn't matter. It's just the zone. Like just pay attention that because
Gotcha.
these there's like movement from this zone. Like when price first reached this zone, it just made a range, right? And finally went above it. Violently came back down to it. Got back up. Violently came back down beneath it. Violently. So every time there's violence, think of it. You're replying to violence in price. If there's violence within price somewhere, there's something specifically happening there, right? Violence in price here. So this is where our next iteration of ranges will be, right? Violence in price here, here, here. If you like, the hour is really good with that, right? Like you see it, you see where for like the past 2 weeks, violence and price, violence, it has to move really rapidly through this. Here's a, when it opened up on Sunday, all that range is right here. So that range kind of helps you distinguish where our POI should be. See, right? So
Hmm.
if we look back on another Sunday, right, and we see the Sunday open, and then there's like a range. That little range is still this area. Now it's just bigger. This little range gets bigger, 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 bigger. Right? So if we go to the last price leg here, right, you see it happening. Here's fair value gap. Violence, moves up, it has to go through. Here's that little range. It's all been in this same area for months. You see it?
Mm,
See it? See it? See it? So if you understand that this is that area, you could trade above it or below it. You see? For months. Right? Look. See? Hits there. Hits there, rejects. Huge violence. Huge violence. Right? You see what I'm saying? So if you can see
yeah.
that this area is kind of like special, and you can mark it out. Whoops. You can mark it out. You can do damage. Above and below it. That's it. Right? I guarantee you, this area will still be what we look for the next week or two until it breaks this area. Then you're gonna have to find out what's this area about, and you have to go to the longer time frames, and then you'll figure it out. But this is where you're gonna be, right? Past 15 minutes, right? This is where it wants. You kind of go from the top down and figure out how to do it. That's all, right? Just don't get caught up in, oh, it has to go short. No, just make sure that, hey, if you're gonna go long, where are your ranges, your micro ranges from here to here? If it goes short, from here to here. If it goes below this, take that short, let it tell you where it wants to be, which I would assume are along this area, past these points of interest, and to this liquidity mark. So tomorrow, I want to see Asia come up around this range, London go lower, New York bounce off of this area. Right? So if New York opens around here and it starts shorting, I will take profit of it here, and I'll be happy with whatever that is. Right? But if it goes against me and I'm able to get out of it with like negative 400 or 300, I'm okay too. You know,
That's a good loss, honestly.
right? So as long as you understand, just understand that 1,000 foot view and take your trades based off of that without any
Yeah, I'm gonna
bias.
start this. Yeah.
You know what I mean?
I guess it helps a lot too because the daily time frame was basically it's been accumulating since what is this, November? It looks
Mm-hmm.
like.
Mm-hmm.
So yeah, it makes that median marker makes perfect sense. I don't know why I didn't think about that.
Mm-hmm.
I guess it's something harder to do once the market is like trending on the daily, but
Yeah,
yeah, when
but
it's an
I
accumulator,
I try to figure out where the tops and bottoms are, and right now we're in
even
that
when it's,
range. Mm-hmm.
oh yeah,
Right.
mm-hmm.
So like here,
Yeah.
there's no tops and bottoms. It just goes for days. Right.
Yes.
There are
What's an
short
example of
days
what you do for that range?
for which one? This one?
Like yeah, mm-hmm. Where
I
there's
mean,
no clear top
that's
bottom.
even here, right? January 2025 here. It drops down, right? So this range is what we want to see, right? Once it drops, right, it hits that again and drops lower. So the next range is here, from here to here. But what we want to do is we're looking at this area from here to here. So if the full range is here, that's our median. This area right here, if I do it again,
Mm,
right, is where I wanted to see violence. I want to see violence here. See that type of violence to get out of it, violence through, couldn't through it again. Violence above it, right? And when it gets to this area again, there needs to be some sort of again violence.
reaction.
You know what I'm saying? To get back down here, right? Like the market overall conditionally wants to do this all the time, go up. But when we have our downfalls of our, let's say, our monthlies, right? This is 23 after Trump left office. That first year for was it 23? 2020, 2020, he left office,
That's
right?
when
When did he leave office? 2020?
I
I
don't
forget. I
remember.
don't remember.
When
But we had a
did he
horrible
start?
year, 21 into 23.
Yeah.
Horrible years. This is let's see, Trump years. First presidency. I would have never thought that he'd become president again. 2017 to 2021, right? So after he left office in 2021, right here, it went up, and then inflation, recession, all the other stuff happens, right? This is him in a nutshell, right? For days, this is what Biden had to deal with, and he got us back up before he left office in 2025, right? So overall, he got us out of the hole that was the reply from how much spending that Trump did. Now, imagine that Trump did all that spending and fucker-uppery within these years, and this happened after him. Imagine what he did here, and how badly the economy will do after he leaves. It'll probably be very bad. But overall, right, in 2000 when the economy sank, in '08 when the economy sank, it doesn't look as bad as it does now, does it?
Yeah.
'08 was a huge recession, and it only looked like that. But
Wow.
this is the Trump years. This is the Trump reply after he leaves office. He all his tax laws that he pushed out was for him after office. This is what happens after office. He's doing it again after he leaves office. He's going to push stuff that fucks up the economy. It's just going to go tank down, right? Instead of this, we should have been so high. We should have been up here in the 3,500 range, but we're not. We haven't passed that. We haven't passed 30,000, right? So you have to understand, like, this is future prediction, right? There will be another session where it really dies down. We need to be ready with money to buy stuff on the way up, right? When this happens again, this is where we should start buying. When this happens again, this is where we should start buying, right? And we'll be wealthier for it. Anyways, I'll leave it off at that. It's almost 10. Any more questions before?
No, that was really good, honestly. Something so simple but so overlooked at the
Right.
same time.
Remember what I said too.
No.
Like I've been teaching myself too to kind of like make it more simpler, because the more complicated I make it, the more that I'm looking for it, the more lost I get in the kind of like sauce, right? I kind of like get lost in the little micro movements. But if I'm looking at a higher time frame, if I'm looking at the bigger picture, you know,
Hmm.
I don't think like today I was so clear with all the things I wanted to do. Here I need to be as close, my stop loss needs to be as close to here as I could. So if it goes up into that area, right, and the 4 hour, right here, shorts, right? So if I'm in the 15 minute, 10 o'clock, it starts shorting again from here to here. I'm in. I need to go in, right? That 10 o'clock bar, this is the 10 o'clock bar. Anywhere in here, this wick area, as close to this as possible, and start shorting, I need to get in. So as you saw,
Right.
you see where my entry is? It's almost parallel to the body of the 10 o'clock bar of the start, the open of the start of that 10 o'clock,
Yeah.
right?
Yeah.
I keep that in mind, right? If my 4 hour starts, the wick is high and it starts going back to the body and starts shorting, and it kind of goes with my narrative of it should be a short day because of A, B, C, and D. Go with it, you know. It also goes with my model. Go with it, right? That's it. SMT there. Go with it. So
Right.
yeah, I hope that helps, man.
No, that's good. I'm gonna start. No, it does. I'm gonna start looking for it tomorrow, and then well, the same zone should be relevant, and I
Yeah.
want to
So
see.
play it,
Uh,
play it with less risk, right? So that you get used to
right.
it,
Yeah.
and then when you're like, okay, I understand these types of like, you know, uh, AMD models of where I should be looking, you know, holistically in the long run, right? And then you go, okay, I can point out this, and sometimes I don't see it, right? But if you see it, do it. If you see it and you see it like happening, and you see this violence, this zone of violence, right? I should trademark that, right? The zone of violence happen, then you should be able to do it. All right.
Right. I got you.
All right, I'll
I
let you
got
go.
you.
I'm gonna I'm gonna go play
All
some
right.
video games and
I
pass out again.
appreciate I appreciate it. Is it all of this saved? This was like maybe
I
an hour and a
recorded.
half.
Yeah, I recorded. I'll
Oh,
probably
all
upload
right.
it
Yeah.
and then put it up on mentorship chart analysis. I'll put it up there.
Got you. All right. Well, thanks for taking the time out, man. I appreciate it.
Yeah, man. Later, brother.
All right. Enjoy the video games.
Thanks.
All right. Later.